in that reversal right now. Now I'm still in the sim on ES, but I base everything off the 30, but I use the 5 minute for execution. And we kind of had that same thing I spoke about yesterday, that 5 minute kind of mountain passy double top, or when volume came back in, there was unable to push towards a new high. So on the break of that area, went short. And as we've been dropping, I'm actually a little bit in front of break even now, just letting it play out.
Nice. Yeah, good work catching that. What did you see on the 5 minute reversal setup or something?
Yeah, I'll show you right here.
Yeah,
if you don't mind.
Yeah, share it. Let's see it. I'm sure everyone here is sick of seeing my screen. I'm gonna stop sharing. Fuck this. You share.
So basically, right here on the 5 minute, I know I blow everybody's mind with this black screen. So we had this nice push. You got some nice volume here on this push. These two nice sized candles. Volume tampers off. We flatten. As we make this pullback, volume decreases, which you want to see for a continued move. But as volume comes back in a bit, now we are pre-market, so not putting a house on it, but we get volume, we can push, but we don't make a nice push back towards the top. Volume sustained, kind of the nothingness right here on the 10 minute. We get this drop, and then I actually go in right on the break of this green dotted line. And like I said, as we made this big candle drop, I just came in above. If it makes a new high on the 30-minute, I'm out of it. Target's down here. What I liked about that is, the concept of, the whole, London, to keep things in balance, London sweeps Asia. We haven't done that. London opened in the high. If you look at this chart here, the yellow is Asia's range. London opened in the higher end, and we popped through it. So there's not even been a test of the midline, and my target is well above that. So I figured it was pretty reasonable.
Yeah, fair enough, man. What I like is your method is a good example of how it's a checklist. You got to have this, and this in sequence, and then you're allowed to put some risk on. For everyone listening, that is a very, very good way to go, because it'll keep you in line. You got to have your checklist. Otherwise, you just kind of, based on your mood, you go long or short. A lot of people do that, and your mood changes based on whether you woke up on the wrong side of the bed or not, or you lost your last 2 trades or not. We're very susceptible to that stuff. So what Brian's doing here is just working with a checklist, and he's got to stick with it. That's it. And if you can't stick with it, well, then you got to step away. Don't trade if you know you're just emotionally too unstable to even stick to your own checklist. Then walk away. So that's the way to trade. Just have it there, and in the end, even after you use your checklist, you got to realize you're still going to lose half your trades, probably more. That's very important. That's the part that people really get stuck at. And then they start trying to find a new checklist. And that's a problem. That's when the problem starts, really. So stick to it. And remember, this is not where you show up to a job and then collect a salary, right? You show up and you have a very real possibility of losing money. So different mindset if you want to make it in this business. Good stuff, Ryan. It's the way to do it. And there is no wrong checklist, except, again, the one that your losers are big and your winners are small. That's the wrong one. You got to find a method that you believe in, that you can execute, that doesn't fight your personality. Those are the ones that make sense.